Welcome everyone. This is Doug with the Lincoln List, and this is the week review for the 20th of April. The month is winding down, so if you're kind of falling behind a little bit, you're looking at your P&L and you're frustrated. You're just frustrated with your overall entries, your exits, your management of trades. You just feel that you are more capable than what you are putting forth towards this market, or maybe you are putting forth a lot into this market and you're just not grabbing it. You're just not grasping what it takes to be successful. Take a moment, visit thelincolnlist.com and take a 14-day free trial to our live trade room. See if our educational format can get you to that next level as a trader, thelincolnlist.com. Now we'll start out here with this watch list. We'll talk a little bit about the SPY as we do every week. And we're obviously having a problem up here towards this 211. If we kind of leave off where we were talking about last week, or I'll just go back to a couple of days because I had thought that once we got up in towards this area on Thursday, we would probably see a test of this 211.06 and maybe perhaps a nice perk going back into these highs of 212.50 and then the all-time highs of 212.97 area. Thought we might see that because we had really established a support down here at this 204 area, and it just looked like that's what was going to happen, or you would think that's what was going to happen because that's the scenario that's played out pretty much ever since 2012. But again, we get another solid rejection, just like we did back here in March. We get another solid pullback here on a Friday. Big sell, you can see it right here. Pretty much bell to bell and a nice little flush. So we're just going to have to continue to monitor this. Really, the market won't continue to just melt up and just rip higher until we really get above this 211. Same way to this downside, this 204 has provided a very solid area of support, and until that's broken, I wouldn't call this market bearish either. So we're really kind of stuck. You can look all the way back here through the month of March. We're really kind of stuck into this really tight channel. Maybe it's not that tight, but between 204s to the lows, 211s to the upside. Those are very significant numbers, at least for the short term. And until either one of those breaks and holds, it won't give us a solid direction as into the if the market's ready for a correction or if we're going to see new highs and such. We just might continue to snap back and forth like we did a lot of the time here at the very beginning portion of the year. You see, you're kind of repeating that pattern again. So we'll just kind of take it day by day. Still, you're going to see stocks move independently of the market. One of these I like to take a look at that we can possibly start trading this next week, or we've been trading, but we'll kind of look at it, is this AGIO. It's in the hot sector here, and this one has kind of held trend with a few of the others. Even though the market had really taken a beating on Friday, there were still a lot of these stocks in this space that remained green. What I like about this one is the daily chart. For me, if you're going to long this thing, unless you really get to this 109 area, 108.96, that's where the real trade could happen. You certainly would want to try to get in anticipation of that with the right intraday setup by using a shorter time frame chart. But I would set an alert right up here around this 108.74. The highs from Thursday didn't quite reach that. Tried to perk up towards their late Friday, but if you get a push above that, I'd be interested in this as a long, at least up until this resistance of 114.08 going back into March 20th. Now, when I mentioned the intraday chart, that would dictate to me as to whether or not that would be a good entry. For example, if it was to gap up or just go parabolic the first 5 to 10 minutes of trading over that 108, 109, I wouldn't take that trade. There's just not enough data in the course of a day for the first 5 minutes. I mean, if you've traded for any length of time, trying to gather what's happening the first 5 to 10 minutes can be a challenge. So you see a lot of fake out and shake moves. I wouldn't do it then. I would only do it if it would pull back, set up, build a strong intraday pattern, or at least gave you a nice area of pivot where you could control your risk, then get long in the anticipation that it would cross this 109, and then would hope that once you did that, you would get some chasers. It would spike that thing up to 110, 110.50, and then you would just go ahead and cash out. Sounds easy enough, right? Of course, it's easier said than done, but let's keep this AGIO. Been bucking the trend, holding the 50 moving average right here on the daily. Looks like it's curled and ready to go. We just need a little bit of push. Volume wouldn't hurt it either. Now, everybody in the world has been trying to predict the top of VLTC, and maybe you're one of those people. Now, the broker I use hasn't had shorts, and that's probably a good thing because I'm sure with this kind of chart I would just be getting very impatient. I think, though, that going into this week will be the week that we're going to see this either make a huge move, but it's probably just going to come back. It's probably going to pull back in a little bit, or that's the odds, I would say. You would think that even with this very steep RSI at 92, that this thing would peel back a little, but each and every day it's just kind of holding really tight. It looks like it wants to go down. You see these red bars, and this only fuels the fire because those who want shorts, these cheaper stocks like this, these lower volume stocks, these are short killers. I mean, these things not just short killers, they're account killers. These will grenade your account because what they do is continually suck in shorts. Every one of these red bars, shorts start piling on it because they're like, this is the crash, this is the bar, this is where it starts, and it just flattens after maybe 20 to 30 cents, and then it turns around and rips back on everybody, and they have to buy back the stock. And it just that pattern keeps happening over and over again. And that's what starts out with stuff like Digley, Lake, Gene. Those runners, they start out, whether they're crap or not, guys, that doesn't really make a difference. What makes a difference is the reality of the situation. Yes, it's overbought. Yes, it should come down, but it's not. And if people keep piling on top of this thing short, it's going to make it worse. From my end, I think you need to see some levels go here and a little bit weaker close. You haven't really got a weak close on this thing. You don't have to be the first to the table here either. I mean, this thing's up, I don't know, 1,000,000,000% it looks like. The stock was like $1 at the beginning of the month, 60 cents or some crap like that. So it's not like you can't chase into a red at some point after a weak close. I should kind of rephrase that. I don't want you chasing into reds. But on a weak close, you could get into this thing and be in a much safer, like the backside move. So you've got the Momo move right here. You still got some strong volume holding this up. What you're looking is that distribution cycle or the backside of that move where that volume starts to taper. The squeezes become less likely. Maybe some people have already grenaded their account or people just give up wanting to short it. That's usually when these things go down. Technically, you've got to get under this 8 spot right here. You can see it from today, and probably it would do even better to get down about this 780s. You're going to need a nice little close. You've got some good rounding wicks here at the top. This is nice. You've got some good rejection there. So even though it is spiking some, the spikes are starting to become a little bit weaker here. You're seeing rejection as opposed to back here where the spikes would just gain more momentum and continue to rip. But we'll just pay attention. As I would say right now with this kind of chart, you get underneath of that 8 on a close. That's a good place to initiate a short using a stop perhaps at highs. VLTC, I think the week's coming here. You got a very steep RSI. Time's due for at least a little bit of profit taking and a nice little pullback. Same could be said for this chop. This is another one that's pretty much the same kind of stock. You get down into this territory and you got to be careful because there's so many chat rooms that trade these micro caps. The lure of easy money. If you guys remember that song, Smuggler's Blues, Glenn Fryer, I think that was his last name or whatever. The lure of easy money has a very strong appeal. And there's a lot of people that say, hey, microcap's easy. You short these things. It's easy. It's easy. No, it's not easy. You get yourself in a hell of a lot of trouble trying to stuff in shorts and being stubborn. It's okay to short it, but you got to admit when you're wrong on certain trades. Again, we're seeing the same theme as what we're seeing with VLTC where, yeah, you look like you got some sell-offs. Like this little move down here, it's just trapping shorts. It's just trapping shorts. You can see it. Hey, I love short. I'm a short person in stature too, but I like shorting stocks. It's about 80% of the trades I make. This is a short. This is a sucker move. That's what it does. Because I took a lot of these in my early years as a trader. You just walk into that and you get smoked on these spikes. These spikes are killing these short sellers. You got to wait until these. You either got to adjust your position size to where stuff like this doesn't shake you, or you just got to wait until this kind of behavior stops. Again, another one that's almost identical to the behavior of VLTC. Super steep RSI, not quite as high as VLTC. Got a nice little rejection area up here. You're going to need to see a weaker close, just like VLTC, and these spikes are going to have to get less and less and less, but good rejection up here, carrying over from quite a few times. So this is a pretty good number to use if you get short this thing, no matter where you're at. I'd really pay close attention to that 440. You stay underneath of that. Eventually the volume will dry up with this one, and it should connect with the 10 moving average down here at about 218. So a couple of charts that looked the same. Now, I'm going to give you a different side of a trade. I've talked about some shorts here. How about this NVDQ? A couple people did a really good job trading this one on Friday in the trade room. What's drawing me to it, of course, is this daily chart. You know, not in terms of dollars, it's the biggest pullback, but this is nasty looking. Obviously, they got some earnings coming up here in the next week or so, but this is a pretty thick move, and you do get some bounces off of some of these washes down here, but this thing was not really able to wash out or flatline until you really got late in the day. I'm going to carry this number over. You might have to stretch out these charts a little bit longer to kind of find a spot. So let's do that. This is pretty good support right here. This is going back to January where this thing is sitting at right now. So this 13, this mid 13 area is pretty important right now. Maybe that's why it kind of flatlined a little bit. Other than that, you kind of got to go back here to the 12th, this low of 1280. I would keep a couple of these areas on point. And of course, $10 is a really strong level, but nearer point targets, these two are pretty good spots. So if you kind of get a flush early on Monday, maybe a little bit more panic selling, you get down into this or close to this area right here, this 1280, the 13 mark, I would go long on this. I think you get down there, you could probably catch a nice little bounce. And when I say get long, it's just a day trade. I wouldn't look to buy this thing and say it's going to make all-time highs again. I'd just be looking to take advantage of a bounce, like something very similar back here where you got a couple of days of flushing. You find some support, you get a spike. That's all I'd be looking for is a spike. Wouldn't even have to last the whole day. It could just be something small like this. Just try to capitalize a couple hundred shares, grab 50 to 60 cents. Yeah, it doesn't sound like a lot, but you do that 6-7 times a day, you're making a hell of a good living, right? You're working out of your home, wearing your PJs to work. I mean, what else do you want? I mean, sure, could always be better, but that's a pretty good living. So that's what I'm going to be looking to do here. You kind of get down into the 13s. Yeah, and maybe, just maybe, if you can catch a little spike around 14 right there and then tight stop that thing right under 1375. Just see if you can connect with some of these moving averages or some of these other higher pivots. So we'll just see what happens. Hell, it might turn out to be nothing. It might just be a joke, right? Just flush and keep flushing, and maybe there won't be a trade on it at all because something will happen during the course of the morning that'll be more exciting. That's what's so important and why you should be a member of the Lincoln List, because the stuff I'm talking to you, maybe none of it works. Maybe we just trade something else. The scanner brings up like the greatest setup of all great setups. If you want those kind of eyes on the market where you've got a couple of hundred eyes all looking at the same kind of setups, trying to find the same setups, your productivity is going to increase substantially. Working together as a team is always better than working solo. Trust me on that one. So you guys need some help. Feel free to visit thelincolnlist.com, take a 14-day free trial. Other than that, thanks for watching the video. You've got about 2 weeks left in the month. Make it good. Finish it strong. See you soon.